The boardroom on the top floor felt colder than usual that morning. Floor-to-ceiling glass windows overlooked the city, where traffic moved like tiny streams of light far below. Inside, the long polished table reflected the serious faces of 12 board members. Laptops were open. Coffee cups sat half-finished. A large screen at the front showed numbers in red. The company had once been a giant in its industry. For years, it led the market, made bold announcements, and celebrated record profits. But those days felt distant now. Sales had dropped for 3 straight quarters. Competitors were moving faster. Investors were asking hard questions. And the board members, who once spoke with confidence, now sounded tired and defensive. They were reviewing possible investors who might inject new capital into the company. Several big names had already declined. A few firms had shown interest but demanded too much control. The mood in the room was tense. Next on the list, the chairman said, adjusting his glasses, is a private investor, independent, no major firm backing him. A few members exchanged looks. Another small player? Someone muttered under their breath. The door opened softly. The man who stepped in did not look like what they expected. He wore a simple navy suit, well-fitted but not flashy. No expensive watch. No assistant carrying files. Just a leather folder tucked under his arm. His hair was slightly graying at the temples. His expression was calm, almost unreadable. He nodded politely. "Good morning." His voice was steady, not loud, not nervous. The chairman gestured toward an empty chair halfway down the table. Not at the head. Not even close. "Please have a seat." As he sat down, one board member leaned toward another and whispered something. A quiet chuckle followed. Another member didn't even try to hide their boredom and continued typing on a phone. The man placed his folder on the table and waited. The chairman cleared his throat. "You have 30 minutes. We're reviewing several proposals today." "Understood," the investor replied. He stood, walked to the front, and connected his laptop to the screen. His presentation appeared. Clean slides. No dramatic graphics. Just numbers, charts, and a simple plan. He began speaking. He talked about the company's current financial structure. He pointed out inefficiencies in the supply chain. He highlighted missed opportunities in emerging markets. He didn't criticize harshly. He simply stated facts. Within 5 minutes, one board member interrupted him. "We're aware of our challenges," the member said, leaning back in his chair. "What exactly makes you think you can fix them?" The tone was not curious. It was dismissive. The investor paused slightly, then answered calmly. "Because I believe the company's core is still strong. The problem isn't the product. It's the direction." A faint smirk appeared on someone's face. He continued. He proposed restructuring certain debts. He suggested closing underperforming branches. He recommended investing more into research and development rather than aggressive marketing campaigns that weren't converting into long-term growth. At one point, he mentioned acquiring a larger equity stake to ensure he could help guide decisions. That's when the first laugh came. It wasn't loud, but it was clear. "Acquire a larger stake," a board member repeated, eyebrows raised. "You." A couple of others smiled openly now. "With respect," another said, "this isn't a small family business. This is a multi-billion-dollar company." The investor nodded. "I'm aware. Are you backed by any major institution?" someone asked. "No," he replied. "I invest independently." Silence followed, then a light shake of the head from one side of the table. The chairman folded his hands. "Let me be direct. How much capital are you prepared to inject?" He gave a number. It was significant. For a brief second, the room went quiet, but then someone scoffed. "That's not enough to control anything meaningful here." He didn't react emotionally. He didn't raise his voice. He simply explained how his investment would be structured in phases, tied to performance improvements. He spoke about aligning management incentives with long-term growth rather than short-term stock boosts. Another interruption. "You're asking for influence," one member said, "yet you don't have the scale." A few nods followed. The investor closed one slide and opened another, showing detailed projections. He had clearly done his homework. He knew their debt maturity dates. He understood their contract obligations. He even referenced internal cost overruns that were not widely discussed in public reports. That caught some attention. One member straightened in their seat. But pride is a powerful thing. Instead of acknowledging his preparation, a different member said lightly, "Reading annual reports doesn't mean you understand how we operate." The investor met his eyes. "I agree. That's why I spent the last 6 months studying more than just the reports." A quiet shift in the air. "6 months," someone repeated. He nodded. "Yes." But before he could continue, the chairman glanced at the clock. "We appreciate your time. We'll review your proposal and get back to you." It was a polite ending, the kind that rarely leads to a second meeting. The investor disconnected his laptop slowly. He gathered his folder. He looked around the table one last time. Some avoided eye contact. A few were already whispering again. "Thank you for the opportunity," he said sincerely. As he walked toward the door, he heard a faint comment behind him. "Ambitious," someone said with a hint of amusement. The door closed softly. In the hallway outside, the atmosphere felt different, quieter, warmer. An assistant at the reception desk gave him a small, sympathetic smile, as if she had seen this scene before. He nodded politely and walked toward the elevator. Inside the elevator, alone now, he didn't look angry. He didn't look embarrassed either. He simply stared at his reflection in the mirrored wall. When the doors opened in the lobby, he stepped out into the busy street. Cars passed. People rushed by with coffee cups and briefcases. The world moved as usual. He reached into his pocket and took out his phone. He made a call. "It's done," he said calmly when the person on the other end answered. "Proceed with the next phase." There was no frustration in his voice, because what the board did not know was that today's meeting had never been about convincing them. It had been about confirming something. As he walked down the sidewalk, he passed a newsstand displaying a business magazine. On the cover was the company's logo with a headline questioning its future. He paused briefly, glanced at it, then continued walking. Weeks earlier, he had quietly begun buying small amounts of the company's stock. Not enough to attract attention, just enough to start building a position. He had studied the company for months. He had analyzed market patterns. He had spoken with former employees. He understood where leadership had gone wrong. And he had realized something important. The board thought they were still in control. But control in the business world often shifts silently before anyone notices. Back in the boardroom, after he left, the members relaxed. "Well," someone said, chuckling, "that was interesting." "A lone investor thinking he can steer this ship," another added. The chairman closed the file. "We'll move on to the next candidate." The meeting continued. Bigger firms presented. More aggressive proposals were discussed. Demands were made. Conditions were negotiated. But none of them noticed that something small had already begun to change. Over the next few days, the stock market showed slight activity. Nothing dramatic, just steady movement. Shares changing hands quietly. No headlines. No announcements. Just numbers shifting behind screens. And somewhere in the city, in a modest office with no large sign outside, the same investor sat at a simple desk, reviewing reports. A small team worked around him. No loud celebrations. No dramatic speeches. Only focus. He wasn't interested in impressing a room. He was interested in building leverage. Because sometimes the person who gets laughed at first is the one who has already planned the last move. And while the board members slept comfortably that night, confident that they had dismissed a minor player, they had no idea that the first step toward losing control had already been taken. The man they underestimated was not walking away. He was positioning himself. Quietly, carefully, patiently. And this time, he was not asking for permission. The morning after the boardroom meeting, the company's headquarters looked exactly the same from the outside. Glass walls, security at the entrance, employees rushing in with coffee in hand. Nothing seemed different, but behind the scenes, small shifts were already happening. In a modest office across town, the investor sat at a wooden desk that had seen better days. There were no luxury decorations, no giant company logo behind him, just a computer, a stack of reports, and a whiteboard filled with numbers written in black marker. He had barely slept, not because he was upset about the laughter in the boardroom. That part did not surprise him. He had expected resistance. What mattered now was timing. On his screen were live market updates. The company stock was moving slowly, but steadily. A slight dip in price after rumors of another weak quarter. Investors were nervous. Analysts on business channels were debating whether leadership needed to change. He picked up his phone and called his small team into the room. There were only 4 of them. No suits, no fancy titles, just experienced professionals who trusted his judgment. They gathered around the desk. "It's starting," he said calmly. One of them nodded. Volume increased yesterday afternoon. He turned the monitor slightly so everyone could see. "We continue as planned. Small blocks. No sudden spikes." They all understood. The goal was not to make headlines. The goal was to build quietly. Over the next few days, purchases were made through different brokers. Nothing flashy, nothing aggressive, just steady accumulation. Each transaction was legal, transparent, and carefully structured. He had already secured agreements with 2 institutional investors who were unhappy with the board's direction. They had lost confidence after repeated missed targets. Those conversations had taken months. Private meetings, detailed presentations, honest discussions about risk. He never promised miracles. He simply offered discipline and long-term thinking. Meanwhile, inside the company's headquarters, tension was growing. Another internal meeting was called. Sales numbers for the current quarter looked worse than expected. A product launch that had been hyped for months failed to meet projections. Social media reviews were mixed. Competitors were gaining ground. In the boardroom, voices grew louder. "We need stronger marketing," one member insisted. "We already increased the marketing budget." Another replied sharply. It didn't work. Blame moved around the table like a restless shadow. No one mentioned the quiet investor from the previous week. To them, he was irrelevant. But outside their walls, the market was slowly changing ownership. Late one evening, the investor walked through a nearly empty office. The city lights glowed through the windows. He paused near the whiteboard and reviewed the updated numbers. Their position had grown significantly. Still not enough for control, but enough to matter. His phone buzzed. It was one of the institutional partners. "I've reviewed your restructuring outline again," the voice said. "If this continues, we're prepared to increase our commitment." He thanked them and ended the call. He leaned back in his chair for a moment. This wasn't about ego. It wasn't about proving the board wrong. It was about opportunity. Companies rarely collapse because of one bad product. They collapse because leadership refuses to adapt. And he believed this company could still be saved. The following week, financial news outlets reported that an unidentified investor had been steadily increasing their stake in the company. Analysts began speculating. Could this signal an activist takeover? One television host asked during a live segment. Inside the boardroom, the chairman frowned at the report. "Who is buying?" he demanded. The legal team began investigating public filings. When they discovered the name attached to the purchases, a few members looked confused. "Isn't it the same individual who presented last week?" Someone asked quietly. The room fell silent for a moment. "It can't be significant," another member said quickly. "He doesn't have that kind of scale." But when updated numbers were projected on the screen, the mood shifted slightly. He wasn't in control. Not yet, but his stake was no longer small. In his office across town, he continued his routine. Early mornings, late nights, calls with financial advisors, meetings with potential allies. He studied not only numbers, but people. He wanted to understand which board members were rigid and which might be open to change. He never spoke publicly against the company. In interviews, when asked about his growing investment, he simply said, "I see long-term value." His calm tone contrasted sharply with the tension inside the company. Employees began whispering in hallways. Rumors spread that a major shareholder was building influence. Some felt hopeful. Others felt anxious. In one department, a senior manager said quietly, maybe new leadership wouldn't be the worst thing. Morale had been dropping for months. Layoff rumors circulated. Budgets were frozen. Bonuses were uncertain. The investor understood something the board had overlooked. When a company struggles, people lose confidence before profits disappear. And confidence, once lost, is hard to regain. A month passed. His ownership percentage crossed a critical threshold. Legally, new filings were required. His position became public knowledge. This time, the news spread quickly. Business headlines read, "Private investor becomes major shareholder in struggling firm." Inside the headquarters, an emergency board meeting was scheduled. The atmosphere was different from before. There were no jokes this time. "How did we miss this?" one member asked, frustration clear in his voice. "He accumulated gradually," the legal advisor explained, "all within regulations. And now, he holds enough to influence shareholder votes, especially if aligned with others." The chairman rubbed his forehead. "Contact him." A pause. "Invite him back," he added reluctantly. Across the city, the investor received the call. He listened carefully. His expression did not change. "We'd like to discuss your position and intentions," the chairman said. "My intentions haven't changed," he replied calmly. "I believe the company needs restructuring." There was a long silence on the other end. "Would you be willing to meet?" "Yes," he said. "But this time, I'd like a longer discussion." He ended the call and looked around his modest office. The whiteboard now showed a different picture. What began as a quiet experiment had grown into a serious position. His team exchanged knowing glances. "This is moving faster than expected," one of them said. He nodded. "Because the fundamentals are weaker than even we predicted." Back at headquarters, the board members prepared for the next meeting with him. But the energy had changed. There was no laughter this time, no whispered jokes. Instead, there was calculation. They had underestimated him once. They would not make that mistake again. As the sun set over the city that evening, he stood by his office window, looking out at the skyline. He thought about the first meeting, the smirks, the interruptions. He didn't feel anger. He felt focus. This was not personal. It was strategic. The market rewards patience. It rewards preparation. And most of all, it rewards those who act while others are distracted. The board had been busy protecting their positions. He had been busy building one. And now, for the first time, the power in the room was beginning to shift, even before anyone had officially changed seats. The second meeting would not be about convincing them he mattered. It would be about showing them that he already did. And this time, when he walked into that boardroom, the silence would sound very different. The second time he walked into the building, the security guard greeted him differently. There was no confusion about who he was. No checking the visitor list twice. His name was already registered at the front desk. A temporary access badge was waiting. The lobby felt the same as before. Bright lights, polished floors, employees moving quickly, but the air carried a quiet tension. News had spread. People knew a major shareholder was coming in for a private meeting with the board. Upstairs, the boardroom looked exactly as it had weeks earlier. The long table, the wide windows, the large screen on the wall. But the energy was different. No one was smiling this time. When he entered, conversation stopped. Chairs shifted. The chairman stood to greet him. "Thank you for coming," the chairman said, extending a hand. He shook it firmly. "Thank you for inviting me." This time, his seat was closer to the center of the table. That small detail did not go unnoticed. The meeting began without small talk. The company's latest financial report had just been released, and the numbers were worse than expected. The stock price had dipped again. Media headlines questioned whether leadership could turn things around. The legal advisor cleared his throat and displayed a slide on the screen. "As of this morning," he began, "our guest now controls a significant percentage of outstanding shares." The exact number appeared on the screen. A few board members shifted uncomfortably. And the advisor continued, "He has secured proxy commitments from additional shareholders. Combined, this represents a controlling interest if voted together." Silence filled the room. It was not dramatic. It was heavy. The chairman looked at him carefully. "Is this accurate?" He nodded once. "Yes." No one laughed. No one checked their phone. One board member leaned forward. "What exactly are you planning?" He folded his hands calmly on the table. I'm planning to protect my investment. Another member spoke, this time without sarcasm. By replacing us, he did not rush his answer. By restructuring leadership if necessary. The words were direct, but not aggressive. The chairman inhaled slowly. You could have discussed this with us. I tried, he replied gently. That landed. There was no anger in his voice. Just truth. He opened his folder and slid copies of a document across the table. A formal buyout proposal, structured carefully. Detailed financial plans. Debt restructuring timelines. Operational adjustments. Clear performance goals. He had not come just to threaten. He had come prepared. The proposal outlined a path forward. It offered existing shareholders a premium above current market value. It proposed stabilizing short-term cash flow while investing in long-term product development. It included leadership evaluations and potential board changes. As they read through the pages, the mood shifted from defensive to analytical. One board member, who had laughed during the first meeting, spoke more quietly now. If this goes to a vote, do you have the numbers? Yes, he answered simply. Another asked, and if we reject this, then shareholders will decide. That was the moment everyone understood. Control had already moved. The rest of the meeting lasted nearly 3 hours. Questions were asked in serious tones. Assumptions were challenged. Projections were examined line by line. He answered everything calmly. He did not raise his voice. He did not criticize past mistakes. He focused only on solutions. During a short break, 2 board members stepped outside into the hallway. We underestimated him. One admitted under his breath. The other nodded. He's been planning this for months. Back inside, the chairman stared out the window for a long moment before turning back toward the table. Why? He asked suddenly. The room looked at him. Why this company? He continued. You could invest anywhere. For the first time, the investor paused longer before answering. Because it matters, he said. This company built something real. It lost direction. That doesn't mean it deserves to collapse. His answer was simple. Not dramatic. Not emotional. But it was honest. Some of the tension eased. Still, not everyone was ready to give up control. One board member crossed his arms. You're asking us to step aside. I'm asking for accountability, he replied. The legal advisor reminded the room that a formal shareholder meeting could be requested. Votes could be called. Changes could be enforced. The power was no longer theoretical. It was practical. By the end of the meeting, no final decision had been made. But something important had changed. The board was no longer dismissing him. They were negotiating with him. As he left the building that afternoon, several employees in the hallway glanced at him with curiosity. Some even nodded politely. Word had spread that he was pushing for change. In his car, he finally allowed himself a slow breath. This stage was always the hardest. Not because of money, because of resistance. Back in the boardroom, discussions continued long after he left. If we fight this, it will become public, one member warned. It already is, another replied, holding up a phone showing a news article speculating about a takeover. The chairman sat quietly, thinking. The company's decline had not happened overnight. It had been gradual, a series of small decisions, delayed adjustments, protecting short-term image instead of long-term health. Now, someone from outside had forced the issue. A week later, an official announcement was released. A shareholder meeting would take place to vote on strategic restructuring and leadership changes. The media attention intensified. Business channels debated whether this was a hostile takeover or a necessary intervention. Analysts dissected the numbers. Employees waited anxiously for updates. Inside his modest office, he stayed focused. There were no celebrations, no victory speeches. He knew that buying influence was only the beginning. If the vote succeeded, the real work would begin. Fixing a struggling company required more than ownership. It required discipline. The day of the shareholder meeting arrived. The auditorium was filled. Investors sat in rows, some calm, others whispering. Board members sat at the front, faces serious. He sat quietly near the aisle, reviewing notes one last time. When voting began, it felt almost ordinary. Electronic ballots. Quiet counting. No dramatic music. Just numbers being processed. Minutes later, the results appeared on the large screen. The proposal passed. A clear majority supported restructuring under his leadership plan. There were no cheers, just a deep shift in reality. Several board members lowered their heads slightly. A few stared straight ahead. The chairman closed his eyes briefly, then nodded. It was done. He had not shouted. He had not argued publicly. He had not insulted anyone. He had simply prepared longer, moved carefully, and acted when the time was right. After the meeting, reporters waited outside the building. Cameras flashed as he stepped forward to give a brief statement. "I believe in this company," he said calmly. "Today's decision is about stability and growth. We move forward together. No dramatic promises. No revenge. Just direction." Behind him, the boardroom that once echoed with laughter now stood quiet. Power had changed hands without a single raised voice. But deep down, he understood something important. Winning control was not the victory. Restoring trust would be the real test. And that work was about to begin. The morning after the vote felt unusually quiet inside the headquarters. There were no balloons, no celebration banners, no loud announcements. Just a steady stream of employees walking through the lobby, glancing at their phones for updates. News articles had already spread across financial websites. The company was officially under new leadership. Inside the top-floor office that once belonged to the chairman, the blinds were half open. Sunlight stretched across the desk. The investor stood near the window, looking down at the city streets far below. He had not asked for the biggest office, but it came with the role. A soft knock came at the door. "Come in," he said. The company's legal advisor stepped inside. "The transition paperwork is complete, effective immediately." He nodded. "Thank you." The door closed again, leaving him alone. For a brief moment, he allowed himself to feel the weight of what had happened. Months ago, he had walked into the same building as an outsider, laughed at, dismissed, given 30 minutes and a polite goodbye. Now, the responsibility of thousands of employees rested on his shoulders. He walked back to the desk and sat down. Instead of reviewing financial charts, he opened a blank notepad. At the top, he wrote one word: trust, because buying shares was mathematical. Leading people was emotional. Later that morning, he requested a meeting with department heads, not just executives, managers from operations, sales, product development, customer service. He wanted the people who understood daily problems, not just quarterly reports. They gathered in a large conference room, unsure what to expect. Some looked nervous, others curious. He did not stand behind a podium. He stood beside the table. "I'm not here to make a speech," he began. "I'm here to listen." That surprised them. For the next 2 hours, he asked simple questions. What is slowing you down? What decisions take too long? What resources are missing? At first, the room was quiet. Years of cautious corporate culture had trained people to be careful. But slowly, voices began to open up. A manager from product development explained how ideas were delayed by endless approval layers. Someone from customer support described outdated systems that frustrated both staff and clients. An operations lead mentioned supplier contracts that hadn't been reviewed in years. He wrote everything down. He didn't interrupt. He didn't defend past leadership. When the meeting ended, several employees stayed behind. One of them said quietly, "No one has asked us those questions before." He gave a small nod. That's going to change. But outside that room, not everyone was comfortable. 2 former board members had resigned after the vote. Others remained temporarily during transition. Some of them felt protective of the old structure. A few worried about their positions. In a smaller meeting later that week, tension rose. "You're moving too fast," one senior executive said carefully. "Major restructuring can create panic." He met his eyes calmly. Standing still created panic. Silence followed. He wasn't reckless. He wasn't planning mass layoffs or dramatic public changes. But he did believe in clarity. Within the first month, he announced a detailed restructuring plan. It included reducing unnecessary executive expenses, renegotiating supplier contracts, and redirecting marketing funds toward product improvement. The press reacted quickly. Some analysts praised the decisiveness. Others warned of risk. Stock prices moved cautiously but steadily upward. Inside the company, employees watched closely. Instead of hiding in the executive office, he walked through departments regularly. He sat with teams during lunch. He asked about families, workloads, frustrations. He remembered small details from conversations. In customer service, he listened to recorded complaint calls. In product development, he tested prototypes himself. One afternoon, he found himself in a warehouse facility outside the city. The floor manager looked shocked to see him. "You didn't have to come here," the manager said. "Yes, I did," he replied. He wanted to see operations with his own eyes, not through filtered reports. What he saw confirmed his earlier research. Inefficiencies, delays, systems that worked 10 years ago, but not today. Back at headquarters, resistance slowly turned into cautious respect. One executive who had once doubted him requested a private meeting. "I misjudged you," the executive admitted quietly. He didn't smile or remind him of past laughter. He simply said, "Let's focus on fixing this." That response traveled faster than any memo. Meanwhile, financial pressure remained real. The company still carried heavy debt. Competitors were still aggressive. A single wrong move could undo progress. Late at night, alone in his office, he reviewed cash flow projections. He knew patience was key. Turning around a company was not a dramatic event. It was a series of disciplined decisions made consistently. In the second month, he made one of the hardest calls. A high-profile but underperforming division had to be closed. It had consumed resources for years without meaningful return. The decision was not easy. Employees would be reassigned where possible, but some roles would be eliminated. Before announcing it publicly, he met with the affected team personally. He explained the numbers clearly. No corporate language. No empty promises. "This is about survival and future growth," he said, "not punishment." Some were upset, some disappointed, but many appreciated the honesty. The media framed it as bold leadership. Critics called it risky. He ignored both extremes. His focus remained inside the building. Gradually, something subtle began to change. Hallway conversations sounded different. Instead of whispering about decline, employees discussed new ideas. Meetings became more direct. Layers of approval were reduced. Projects moved faster. Quarterly results showed the first signs of stabilization, not dramatic growth, but steady improvement. In a board meeting 3 months after the takeover, updated charts appeared on the screen. Revenue decline had slowed. Operational costs had dropped. Customer satisfaction scores had risen slightly. No one clapped, but the room felt lighter. The same table that once echoed with laughter now held thoughtful discussion. One remaining board member looked at him and said, "You were right about direction." He shook his head gently. The data was right. He never framed it as personal victory, because he understood something deeper. Leadership is not about proving others wrong. It is about proving the future possible. As the 4th month approached, industry analysts began shifting their tone. Articles that once predicted collapse now described a disciplined turnaround in progress. Employees felt it too. A young analyst in finance told a colleague, "For the first time in a year, I'm not worried about my job every morning." That mattered more than headlines. One evening, as he prepared to leave the office, he paused in the now familiar boardroom. The sun was setting outside, painting the sky orange behind the city skyline. He remembered the first time he stood in that room. The smirks, the interruptions, the laughter. He did not feel anger about it anymore, only perspective. Because if they had taken him seriously that first day, this transformation might never have happened. Sometimes doubt creates the space for action. Sometimes dismissal fuels preparation. He turned off the lights and walked out. The company was not fully healed yet, but it was no longer drifting. Direction had replaced confusion. Accountability had replaced ego. And slowly, step by step, a business once close to collapse was learning how to stand steady again. The power shift was complete. Now came the final test. Could stability turn into real growth? That answer would shape everything. 6 months after the vote, the building no longer felt heavy. It was not loud or flashy. There were no giant posters celebrating a comeback, but there was something different in the air. People walked with purpose again. Conversations in hallways were about new projects instead of rumors. The company had not become perfect overnight, but it had found its balance. In the executive office, he sat at the same desk where he once wrote the word trust on a blank page. That page was still inside his notebook. He kept it there as a reminder. The latest quarterly report was open on his screen. For the first time in over a year, revenue had grown, not dramatically, not enough to shock the market, but enough to prove that the direction was working. Expenses were under control. Debt had been renegotiated with better terms. Customer retention numbers had improved. When the results were released publicly, the stock price rose steadily. Financial channels spoke about disciplined leadership and quiet execution. Some even called it one of the most surprising recoveries of the year. He did not celebrate. He called a meeting instead. Department heads gathered once again in the same conference room, where months earlier they had cautiously shared their frustrations. This time, the atmosphere felt lighter. He stood in front of them, not with a slideshow full of charts, but with a simple message. This growth, he said, belongs to you. Some smiled. A few exchanged proud looks. It came from better ideas, he continued, from faster decisions, from honesty. He paused and added, and we're not finished. The next phase was not about survival anymore. It was about building strength. He approved funding for 2 new product lines that had once been delayed by endless approvals. He invested in upgrading outdated internal systems that employees had complained about for years. He expanded training programs so younger staff could grow into leadership roles. One afternoon, he walked to the product development floor and noticed a group gathered around a prototype. They were debating details, sketching ideas, laughing at small mistakes. That sound, laughter, felt different now. It was not mocking. It was creative. Later that week, he received a message requesting a private meeting. It was from the former chairman who had stepped down after the takeover. They met in a quiet cafe across town. The former chairman looked older than he had months ago, less defensive, more reflective. I've been watching the numbers, he said. You did what we couldn't. He listened without interrupting. We got comfortable, the former chairman admitted. We stopped adapting. There was no bitterness in his voice now. The investor nodded slowly. It happens. A long pause followed. I owe you an apology, the former chairman added quietly, for the way we treated you that first day. He thought back to the laughter, the smirks, the dismissive tone, but time had softened the memory. You were protecting what you built, he replied calmly. I understand. And he meant it. They shook hands before leaving, not as rivals, not as enemies, just as 2 people who had shared a difficult chapter in the same story. Back at headquarters, momentum continued to grow. Analysts who once predicted collapse now invited him to interviews. He accepted a few, but kept them brief. When asked how he managed to turn things around, he never mentioned the laughter. He never spoke about being underestimated. Instead, he said, we focused on fundamentals. Inside the company, something deeper had changed. Employees began sending ideas directly to leadership without fear. Meetings became shorter and more focused. Decisions that once took weeks now took days. One young employee approached him in the hallway. I almost left this company 3 months ago, she admitted. I didn't think it had a future. He stopped walking and listened. I'm glad I stayed, she added with a small smile. That comment meant more than any headline. By the end of the year, the numbers told a clear story. Revenue growth had stabilized. Profit margins improved. Investor confidence returned. The company was no longer fighting to survive. It was planning for expansion. At the annual shareholder meeting, the atmosphere felt completely different from the one held months earlier. There was no tension in the room, no whispers of uncertainty. He stood at the front, looking out at the crowd of investors. We faced hard truths, he said. We made difficult decisions, and we stayed disciplined. He did not take credit alone. He highlighted department teams. He acknowledged long-term employees who had stayed, through the worst months. He thanked shareholders for patience. When the meeting ended, applause filled the room. Not loud and dramatic, but sincere. As people filed out, one older shareholder approached him. "I remember when you first started buying shares," the man said. "Most people thought it was a mistake." He smiled slightly. Sometimes the best opportunities don't look impressive at first. That evening, he stayed late in the office. The building was quiet again, like it had been on his first day in control. But the silence felt peaceful now, not heavy. He walked into the boardroom one last time. Before leaving, he stood near the seat where he had once been told he had 30 minutes. He could still picture the moment clearly, the interruptions, the doubt. But instead of replaying it with frustration, he saw it as a turning point. If they had welcomed him warmly that first day, he might have remained just another minority investor. If they had taken him seriously without resistance, he might never have pushed forward with full control. Sometimes resistance shapes resolve. Sometimes doubt creates clarity. He turned off the lights and stepped out into the hallway. As he rode the elevator down, he thought about the simple truth that had guided him from the beginning. Power does not come from speaking the loudest. It comes from preparing the longest. When the elevator doors opened into the lobby, a group of employees were leaving for the day. They nodded respectfully as he passed. One of them said, "Good night." He nodded back, "Good night." Outside, the city light stretched across the skyline. Traffic moved steadily below. The world continued as it always had. But inside one building, a quiet transformation had taken place. A man who had once been laughed at had not argued. He had not shouted. He had not demanded respect. He had earned it, not through revenge, not through pride, but through patience, discipline, and belief in something others had stopped believing in. And in the end, the company that once dismissed him was stronger because he never walked away.